Welcome back. Let's talk about the latest debutante on Dalal Street, Jana Small Finance Bank. It has been a subdued listing for them, listing at 4% below the issue price of 414 rupees. They listed around 396. Okay, now at 397. And the fault doesn't lie with the demand for the stock. It was subscribed 18 times or oversubscribed 17 times. It's just the day that it is listing is a somber day because of happenings in the US. But joining us now to speak about the bank is Ajay Kanwal, Managing Director and Chief Executive Officer at Jana Small Finance Bank. Ajay, good morning and thank you very much. Congratulations on the listing, though it's a subdued one. What's your sense going forward in terms of the business? What are you all targeting in terms of deposit, loan growth and margins?
So a very good morning to you, Latha. And as you know, small finance banks were used to always going against the tide. So it's a somber start. We have used to, going against the tide and rising up. And that's been our journey so far. And see, from what do investors expect or what will the bank do? I just want to highlight a few things, Latha. 5.5 years since we converted from a microfinance institution to a small finance bank, we have moved towards a customer franchise, which has automatically taken the bank to a secured business. So we are roughly about 58% secured, which tells you that the book is much more resilient and much more customer focused rather than a product company. Second, our growth rate, if you take September growth rate on loan book, is about 40%. You take a liability growth rate, it's about 37%. So we have very strong growth rates. And one should expect strong growth rate for banks like us because clearly we are serving the underserved segment. So there is a lot of demand. Our
Ajay, what
most
is the
important parameter really is, sorry.
No, what is the credit deposit ratio at this point in time? I know that you all have just started on your liabilities move, but what is the credit deposit ratio right now?
Yes. So the CD ratio as of September 23, Latha, was at 110%. Okay. And I must say, given the growth in branches, the growth in RM, the launch of products, our ability to price deposits, we certainly see that being maintained at a much lower level as time passes.
Okay. And what about margins? I mean, while I know that you all have started on your journey on getting liabilities from your customers, what is the expectation in terms of cost of deposits? It's coming at a tough time. And therefore, what will be the trajectory of margins, you think?
So, Latha, our total deposit book is 19,000 crores.
Yeah.
And we have roughly about 5 lakh customers who are on the liability side. And like I mentioned, the growth rate is 38% year on year. Now, the cost of fund increase in between March to September has been 40 basis points on the deposit side. Okay. However, our net interest margin for the bank, which was at 7.7% in March, is at 7.8% in September. So thanks to the product mix on the asset side, we have made sure that the entire increase of cost of funds has been absorbed through our product mix change. Secondly, very importantly, we are 5.5-year-old as a bank, and really the trust factor, customer believing us, making sure that their AUM with us keeps growing, is a phenomenon we're seeing as time passes. So something we are very comfortable with, and we will certainly make sure our deposit rate far outpaces the asset growth.
Okay. No, as you pointed out, it is the nature of your asset which keeps your margins high. It is 42% unsecured. And of course, in that kind of business, unsecured business is likely to be high. But you have some troubled past in terms of the quality of assets. You have had a large write-off in both FY22 and FY23. Can you give us some guidance in terms of asset quality?
So, Latha, 2 times where we've really had asset quality issues have both been, times which had unprecedented large natural issues. So clearly COVID was the last one. So, but if you take March 20 numbers, our unsecured net NPA was below 1%. Okay. You take September 23 numbers, our unsecured net NPA is still below 1%. So I think we do struggle when things become really, what I should say, 1 in 25-year events. But if you take all the regular economics cycles or natural ways the country works, our collections are 99% plus. So I think just to get the quality of book right, one is only when it's really troubled, we get troubled. And certainly on the unsecured side. Now with 58% becoming secured, and we have done 58% in the last 5.5 years, it's been a secular move. And I'm sure we will continue going that way. I do think that even if a next crisis does come up, we are much more resilient than we were probably a few years back.
Okay. Are you planning to bring down your unsecured book? Are there any internal targets?
So there are no targets. See, Latha, we are moving in a very natural customer way. You know, if you take a customer's balance sheet, the biggest loan product is actually the mortgage, right? Then the car loan, two-wheeler loan. Unlikely the customer's balance sheet has 70 to 80% unsecured. So as we move towards the customer, we will naturally get secured, and which is what we are seeing happening in the bank as we speak. So more than targets, it's about us making sure that we're meeting customer needs, and that automatically leads to, let's say, a two-wheeler loan, a four-wheeler loan, a gold loan. If he's got a property, a LAP. Even in MSME, we are doing supply chain, vendor finance. We are moving naturally towards secured. It is not an unnatural push. And obviously, you know, the other very important part is the secured loans are longer-term loans. They run off very slowly. Unsecured loans are shorter, 2-year loans. They run off very fast. So the book is also naturally building much faster in secured. Our secured growth rate from 21 to September 23 is about 40%.
Okay. No, I'm not holding it against you, given the nature of your clientele, and unsecured loan would perhaps be necessary. I'm not holding it against you. I'm just saying that, you know, for a bank investor, one would want to know the safety of that loan. What about margins? You said it's risen from 7.7 to 7.8. But you think this can improve, or given the cost of deposits, the pressure is downward? You're more likely to report closer to 7.5 in the coming quarter.
So, Latha, my sense post-budget and what we see around is, you know, we kind of plateaued in the cost of funds. We obviously saw a big rush for deposits and pricing of deposits in the last 1 year. But my sense is that given what we are doing and what I can see competition doing, we've plateaued out. So I do think NIMs will sustain from where we are. As we turn more secured, there could be a small drop in NIMs, which will easily be compensated back by a drop in cost of funds. Or of course, you know, our cost of operation will also get better. Because as you know, secured businesses tend to be a lower cost income than unsecured businesses.
Yes. So you expect your cost to income and your credit costs to fall?
Yeah, so see, we are building a resilient model which is more secured. We have good NIMs because, see, we operate in affordable housing. So while I'm big in housing, my average ticket size for housing is 12 lakh rupees. So we tend to get better NIMs even though we do secured because we're doing small ticket size. I have a micro lab book. Ticket size is 9.5 lakh rupees. The yields are much better. So I think yield management is manageable by us. Market is good. We just need to make sure that we do good growth.
Okay, yes. I guess everything will depend on diligence. Ajay Kanwal, thank you very much for joining us. Congratulations once again for becoming a listed stock.
Thank you, Latha.
And we will touch base with you every quarter.
Thank you.
Okay, so that's the listing of the day. Not the most propitious environment.